It is alleged may be the appropriate way to start any discussion of the Gamestop shorting standoff, which has developed in January. Robinhood, an online trading app, has now reinstated trading in GameStop shares after securing $1 billion of financial backing. The co-founder of Robinhood denied that the previous suspension was due to pressure from Wall Street hedge funds who had shorted GameStop's shares while small investors were bidding the price up. This has been portrayed as a David and Goliath struggle in the market, with small traders pushing back at the influence that big trading houses in New York have through their market position. Like Blockbuster, GameStop are a US shopfront operation, here retailing computer games as physical media in a downloading world. It has been suggested that a number of Wall Street analysts concluded that GameStop's business model was unsustainable and therefore shorted the stock, borrowed shares at a fee and selling them, expecting to buy back the shares at a fraction of the price when they had to be returned, and making a massive profit. The Reddit group Wall Street Bets Forum had other ideas. They have been trading in GameStop's shares, raising the price, knowing that at some point Wall Street traders were going to have to buy them back. In April 2020, GameStop shares were trading at $3.25. On Wednesday, the 27th of January 2021, those stocks were worth $347.51 each, with a net worth of the company at $22 billion. Melville Capital Management retired its GameStop position recently, with suggestion that the company had lost around a third of its hedge fund value this year, a figure over $4 billion, with GameStop contributing. Melville Capital Management have had to raise $2.75 billion to refinance their fund. Ryan Cohen bought 13% of GameStop in September 2020 and wanted to convert the company to a digital challenger to Amazon, at which point small traders started to pile in, backing the idea that out of a failing firm, a challenger to the FANGs would emerge. For those not familiar with the acronym, Facebook, Amazon, Netflix, and Google, or FANGs, is a representation of large corporate America in the digital age. It is not surprising that the small investors are using memes based on Leonardo DiCaprio's portrayal of Jordan Belfort in The Wolf of Wall Street to challenge publicly what they see as Wall Street pressure. The idea of rugged individualism as a means to success and achieving the American dream is still revered. And for the GameStop investors, they might just achieve it. Thomas Piketty's Capital in the 21st Century largely speared the idea of unfettered mobility in the US, portraying the country as a system of closed stratas, meaning that you can get to the top of your strata, but it is very difficult to move to the next one. Michael Lewis's excellent The Big Short and Adam McKay's film adaptation really identifies what the GameStop investors are railing against. Not that any of this is new. Reuters on the 28th of October 2008, in the midst of the Great Recession, noted that German car manufacturer Volkswagen had become, briefly, the most valuable company in the world based on its share price as a result of shorting. 298 billion euros by value. The share price reached 1,005 euros, climbing from 34 euros, making Volkswagen bigger than ExxonMobil, the US-based oil company. Porsche, a rival German company producing cars, wanted to take over Volkswagen, had shorted its own shares in VW, and then effectively bought them back, squeezing the market, meaning that there was only 5% of the total shares available to be traded. This led to a scramble by investors to buy these shares, to return them to Porsche. Now, all of this was legal, but this did somewhat rebound on Porsche, and Porsche are now owned by VW. Insider trading is of course illegal and was rife in the 1920s in the rise of the Dow Jones Index. What is now known as pump and dump was common. Brokers would encourage their clients to invest in particular stocks, often with broker's loans, meaning the investor would only have to come up with 10% of the investment up front. The broker would cover the other 90%. In collusion with other brokers, they would get out at the top of the market, taking the biggest profit, and then advise their customers to do the same, but only after the peak price had been achieved. Overconfidence and stock market manipulation in the 1920s produced the Wall Street crash in 1929 and the devil's decade of the 1930s that was to follow. For the current crop of GameStop investors, they are trying to stick it to the man, so to speak. Their fear is that the weight of Wall Street interests are looking to stack the deck against them. Some are wondering why Wall Street suspended the Robinhood Stock Traders Group, or Robinhood's initial decision to suspend GameStop shares. Joe Kennedy liquidated his Wall Street holdings in September 1929, the month before the Wall Street crash. He said famously, "Only a fool holds out for top dollar." This standoff between the small investors and the shorters on Wall Street can't go on for much longer without someone blinking, and some smaller investors might do well to take their gains now and to walk away. Either way, there will be tears over GameStop in the near future.